MSTR down 5.06%. This is Friday, the 21st of November, 2025. Intraday low in this pre-market session, $167.34. Underlying trend is now bearish. Okay, lower prices have just continued to print, but we are expecting the algos are expecting that a bounce might happen from Monday, but it's not expected to challenge. It's not expected that it might be able to challenge its 40-day moving average. If anything, if it's going to do so, it's going to be towards the end of this year, maybe early January or something like that. Positions opened all the way back to 200 days ago are not in profit. It has a pivotal projection of 258.60, but that looks like a tall order now. Looks like a tall order. If it closes above that, then it might be able to challenge 270.41. Let's see what we have on its 4-hour chart, which is currently reflecting this loss of 5.2%. It's just an abating. So, but in any case, it's algos are expecting that a moderation might occur, going all the way towards Tuesday the 25th, and then after that, the downtrend may resume. So maybe it's suggesting that maybe this weakness, this 5% decline, it has printed now, it wouldn't amount to very. I wouldn't amount to very much. It might maybe recover some of it and just trade sideways. But sideways a consolidation does not mean that it wouldn't you know print lower prices. So as a matter of fact, the momentum for this on this 4-hour chart is saying that momentum is going to pick up in this pre-market session and remain strong up till Friday the Tuesday the 25th. Okay, so let's see now what we have going on right now on MSTR. Okay, high beta 212,000 shares have crossed the tape so far. Another place we can have a look is its options agreed. These ones November 21, they will expire today. Let's see what we have. It's not exactly known to be highly active in terms of volumes, but let's have a look at the 20 December 19 series. Not very much going on there. Yeah, the stock is currently trending as well. Let's find out what's going on.
Strategy MSTR is trending sharply downward as mounting concerns over its massive Bitcoin exposure and potential index exclusion fuel widespread anxiety across the investing community. With Bitcoin's recent volatility dragging correlated assets lower, traders are increasingly questioning whether MicroStrategy's highly leveraged Bitcoin strategy is reaching a breaking point. A major catalyst for the bearish sentiment is JPMorgan's recent warning that MicroStrategy could face a potential $8 billion stock sell-off if it's removed from the Nasdaq 100 index, a scenario they argue is increasingly possible due to the company's extreme concentration in Bitcoin. The mere prospect of such forced institutional selling has amplified fears of cascading downside pressure, especially given the company's already elevated volatility. At the center of the debate is Michael Saylor's leveraged approach, which ties the company's entire balance sheet and future prospects to Bitcoin's performance. With BTC swinging violently in recent weeks, community discussions have zeroed in on the risks of margin pressure, debt obligations, and even theoretical liquidation or bankruptcy scenarios if Bitcoin enters a deeper drawdown. Across trading forums, investors are split. Bears argue MSTR is essentially a leveraged Bitcoin ETF without regulatory protections, overburdened with debt, and vulnerable to a liquidity crunch. Many are discussing whether to short the stock outright or hedge their exposure through direct Bitcoin positions. Bulls, though fewer, believe the sell off may be overextended and view MSTR as a high risk, high reward proxy for long term Bitcoin accumulation. Though even some supporters acknowledge that the recent warnings add meaningful structural risk. Adding to the pressure, speculation around possible removal from the Nasdaq 100 has intensified, with many noting that such a move could trigger automatic selling from index funds and ETFs. Overall, strategy MSTR sits at the center of a perfect storm of crypto volatility, institutional caution, and balance sheet vulnerability, leaving traders divided on whether the stock is approaching a major breakdown or a potential contrarian opportunity.